Building Rural Wealth. Dan Miller with me this morning.
Hey, good morning, Aaron. How are you?
I'm doing well. How are you, Dan?
I'm good.
Kaleb Roebuck with us. Well, Kaleb, how are you?
Hey, good morning, Aaron.
How was your weekend?
It was good. It was good.
Hey, one of the things that has been in the news a lot is the big, beautiful bill. You turn on any news channel, and the big, beautiful bill is all we have heard about. So you're going to kind of break that down a little bit. Talk to me a little bit what this is about, Dan.
Well, you bet. You know, it was signed on Independence Day, about 1,000 pages of the big, beautiful bill signed on Independence Day. And there is going to be some effect for about everybody, you know. So just a general overview, and then we'll touch on some of the other thing. You know, one of the biggest, most important things probably of the bill is that it does lock in the 2017 tax cuts. And then in addition to that, it does add some new tax breaks, some deductions for everybody's heard the deal, no taxes on tips and overtime, and some auto loan interest. There's going to be a $6,000 deduction for seniors receiving Social Security. And then another thing that's been a little controversial, I know, but there'll be some strategic cuts to funding for Medicaid and SNAP. And, basically, those are designed for those that have kind of been abusing the system. So there's been a lot of controversy about that, but it is designed to, fight abuse, basically. Yeah. There will be elimination of some clean energy incentives and overhaul some of the student loan. And again, that kind of goes back to addressing some of the abuses. So as with any bill, how it is going to impact everybody is going to depend on your individual circumstances. And, many of the provisions, like I said, are designed to combat waste, fraud, and abuse. And, it's one of those things, Aaron, you can't, how do you eat an elephant? One bite at a time. Yep. Well, some of these, we know our national debt. We know our, those kind of things. How do you address some of those things? Well, bite at a time. Yes. And some of the provisions in the bill here are designed to do just that.
Tax cuts, Kaleb. What are we talking about there?
Yeah, and especially like for investors and planning and stuff, like kind of through that lens, that's where this adds a lot of permanence to it. The tax cut or the permanence of the extension of the 2017 tax cuts are now permanent. What Dan mentioned, what people don't realize, if they did nothing this year, tax rates and brackets and all that were going back, reverting to what they were in 2017. Also, the other big one for investors and planning is the estate and gift tax exemption. That in 2026 is going to $15 million per individual or $30 million for couples.
Dan, what about new parents? What do we have to look at for children?
Well, first, there is a child tax credit that will increase up to $2,200 per child. And that will be indexed for inflation. And then also you may have heard about the Trump accounts. So that's what they're called, the Trump accounts. And basically they're accounts designed for children that are born between 2025 and 2028, which if you think about that coincides with this current presidential term.
Sure.
And basically the idea behind that is they're designed to encourage couples to have children. As you know, we've had a decline for several years in the birth rate in the United States and actually kind of throughout the world.
Absolutely. There's
a $1,000 one-time federal deposit per child. Okay, so the federal government's going to give you $1,000 to have a child, basically, born in that time frame. Parents can add $5,000 per year. Employers can add up to $2,500, and that'll be non-taxable income. These grow tax deferred. They're taxed as long-term capital gains on qualified withdrawals. Later on, if I remember correctly, the withdrawal period is after age 18.
Okay, so let's talk about this, families with children, Kaleb. So this is, here you go, Kaleb. You have kids and you have families, so talk to me about what does the big, beautiful bill do with families with children?
For families with children, the child tax credit, like Dan mentioned, increases to $2,200 per child, and that becomes permanent and indexes to inflation for future years. So that means it'll continue to go up. That's pretty standard. That's kind of been that high. Now it increases. It's $2,000 this year, so it's increasing a little bit.
Service workers. Is this the tax? This is the what are we talking about
here?
No
tax on tips.
Yes,
absolutely.
That's
no tax on tips. Up to $25,000 a year from 2025 through 2028. So it is another, temporary provision that could be extended, of course. And these also do have phase outs. Again, above 150,000 per individual or 300,000 joint income. Again, the idea with this is to help those that really need the assistance. Or I shouldn't say really need it, but it's not designed to help the folks that have large incomes. So, and then also no tax on overtime. That was another. If everybody remembers during the campaign, that was another thing that President Trump ran on back in the day. There is an overtime pay deduction up to $12,500 single, $25,000 joint.
All right, car buyers. Kaleb, what do we have going on there?
Yeah, another new deduction is new car buyers can deduct up to $10,000 of interest on new auto loans, and that does apply to 2025 through 2028. But that applies to American-made, American-manufactured vehicles. So anything bought through 2028 you can deduct up to $10,000 in that in loan interest on it.
Okay.
But there are phase outs for it. They do apply to $100,000 for single individuals and $200,000 joint. So who are claiming Social Security. So it doesn't apply if you're 62, 63, 64 claiming Social Security. This doesn't apply to you. It's 65 and over is that $6,000 additional standard deduction, which for I think I saw some of the estimates, which for 90% of the people eliminates their tax on Social Security and stuff like that. So it's kind of the offset to their Social Security. So it is a pretty big deal, but it does go through 2028. So another one of those ones that end at the end of Trump's term. There are phase outs with this as well too. It is $75,000 for single individuals and $150,000 for joint. We
talked a little bit about Medicaid recipients. Talk to me about that, Kaleb.
Yeah, so some of the trade-offs in the bill that we mentioned on the beginning are those Medicaid recipients, and part of the projected cuts of the bill are projected $1 trillion in cuts over that 10-year bill period to Medicaid and the Children's Healthcare Insurance Program. By also implementing some of those new work requirements for able-bodied adults, some of those 20-hour work weeks, also exemptions applied to some of those as well too. Also tighter state funding limits and what they can provide and charge for. But also the bill does allocate it for $50 billion in rural hospitals impacted by cuts as well too. So
and I know this is something that is a concern for all these rural hospitals.
Yeah, absolutely.
Because they rely a lot on Medicaid funding.
Yep.
And so I know, that $50 billion in there for rural hospitals is huge. Now, is that enough? Yep. How's that going to be divided? I don't know.
SNAP benefits, people on SNAP. What are we talking about there, Dan?
Well, again, SNAP's to contribute. One of the things that states are now going to contribute a larger portion of those SNAP benefits, 5 to 15% of those benefit costs, and up to 75% of the administration cost, administrating the programs, and that's a substantial increase for some of the states. And like Kaleb mentioned, there are expanded work requirements. Again, the idea here is, prevent some of the abuse, for people. Mm-hmm. And those work requirements for adults 55 to 64 have expanded. Parents with children under age 14 plus. So it's estimated that about 5.3 million households could see benefits drop as much as $146 a month on average. So, that is substantial. Mm-hmm. But again, a lot of this is to encourage people to go back to work. And then also, one last thing I'll mention here is about some changes for small business and gig workers, and this is good news. Section 199A, and just about you talk to any farmer or small business people, they know what that is. That's the 20% pass-through business deduction has now been made permanent. And again, that applies to small business owners, contractors, and gig workers. So if you buy equipment or anything like that, that Section 199A is a huge pass-through. And like I said, that can be substantial.
So let's wrap this thing up there. Just throw it up there. Kind of, what do you want people to take away from our conversation here, Kaleb?
Yeah, well, that's why I just echo first. Again, this is still kind of in the process. Like it just passed, this past 4th of July weekend. So, now it goes to all these agencies, the IRS and stuff, to actually write these rules, figure out the forms, give guidance on all this stuff. So, still just keep looking out. We'll still be updating people, but to me, the big thing, it brings, permanent tax relief and some new deductions and just that consistency to our tax code.
As soon as this happened, I talked to, our group here in the office, and I said, we got to get on top of this or be on top of it. We've got to get some information out there. I talked to Sloan right away and said, hey, we need to get, radio show out here. We need to have, the guidance and of prepared, because we're going to have questions. And so, however we can help folks, we want to do that.